Hello, everyone, and welcome in to crushthestreet.com. I'm Kenneth Amaduri. I'm joined today with a brand new guest here on the show, a really pleasant guy. I've had a few moments here to do a quick little pre-interview, and I've gone through a lot of his pieces. And, he wrote an article that I think we're going to talk about today, and I think you're going to enjoy, that went viral on Zero Hedge talking about Trump. So we're going to get Dan Kurz's thoughts on the economy here. Dan is a CFA with over 30 years of investment industry experience, including 2 decades spent working in Zurich, Switzerland for private banks. His website is dkanalytics.com. I highly recommend everyone to go there and visit his work. Without any further ado, Dan, thanks for coming on Crush the Street with me today.
Thank you very much for the invitation, Kenneth. Glad to be here.
And before we get into the call, I want to remind everyone at Crush the Street, there's a new section called Critical Investor Data, where we really break down dividend stocks, high-paying dividend stocks, and blue-chip stocks. So visit crushthestreet.com and check out the Critical Investor Data on our homepage. Let's get into the interview. Dan, you understand economics much better than the average person, I would say. And the stock market seems resilient and the jobs market is booming. And I got to ask you, what do you make all of this, considering the unsustainable debt and the interest rate environment? There's a major dichotomy going between, positive results and unsustainable factors.
Yeah, thanks for the opportunity once again. And economics is the dismal science. It's titled as such for a good reason. But hope dies last, or springs eternal, in terms of trying to dissect what's going on. And common sense is always a good way to do it. The stock market. Well, we know there's a lot of algos. We know there's computer-driven trading. We know that when Trump won the election, the deep state and the establishment was supposed to take him down, and the stock market was supposed to come apart at the seams, and just the opposite happened. And we kind of built on that, and we got momentum. People, investors, as we both know, are not always so sensible. They buy what goes up the most and sell what doesn't, or sell what goes down. So part of this is this feedback loop and sustaining bubbles, which over time has been amplified, obviously, by central banks, which has pushed down interest rates and thus up the net present value of bonds and stocks alike, and they are tied at the hip. So I think a lot of that is still residue from that sustained momentum, people looking at technicals over valuations, capital protection, and good return prospects, which all are not good given these astounding heights that stocks and especially bonds find themselves in. If history is any guide, if return dynamics are any guide, if the debt we're in, the falling productivity, the misallocations thanks to a decade or more of unprecedented global financial repression have brought us what I like to term a toxic public policy stew. And you're right. If one steps back and one sees stock and bond markets trading, other than now the emerging market debacle that could roll out globally, at absolutely nosebleed levels. And one also dials in the fact that we're going to also have a recession. They haven't been rendered academic, and we're in the midst of an unprecedentedly long and toothless recovery, quote unquote. Then things are very interesting. You mentioned one more thing, and that's the jobs, and the job market is good. Well, if one uses the government's, I'm going to say, phony unemployment statistics, when Donald Trump ran as a candidate, he ran on actually, I'm going to call it the modern day misery index. Fake jobs, fake unemployment, and fake inflation. And also one big, fat, ugly stock market bubble. Well, that's still with us, except the heights are greater, and we're risking a trade war. Ever more so, and you mentioned the piece that Zero Hedge picked up, the good, the bad, and the ugly. And heaven knows there's a lot of good things about Donald Trump in terms of trying to get back to the Constitution. But his Hooverism on the trade front is truly dangerous. And I think, coupled with the contagion that's spreading possibly beyond the emerging world countries to the rest of the world, notice that Germany, Berlin offered anarchy a bailout of sorts in the hopes of not having it spread west. So we're not in a situation either market-wise or job-wise that is very robust. In fact, if I could say one more thing about jobs, if we can peel back the way the unemployment rate was tabulated back in the 80s before Slick Willie massaged them, and they've been massaged since, as has the savings rate and the GDP rate, we really don't have that kind of unemployment. If we took a tally and set back the time needle to the early 80s, we would be looking at over 20% unemployment. So, and you and I both know that even the government statistics show a labor force participation rate that is at a 40-year low. And both of us also know that if someone loses a high-paying full-time job and happens to get 2 or 3 part-time jobs without benefits, we get lower unemployment. And then we have something terrible called the birth-death model, which extrapolates into the future this phony assumption of net new incorporations being much more robust than is actually the case. And last but not least, almost all of these things are revised to the negative a quarter or two later or a year later, but nobody pays attention to that. So perhaps a bit much to chew on all at once, but how's that for a start?
It's definitely well received here at Crush the Street, and something that we absolutely are open to. A lot of people, it's kind of interesting. They're just so worried about accepting that the truth to this. There's like this calloused film around people's minds that doesn't allow the possibility that, you know, the government might be lying to us or might not be telling us the whole truth. And, you know, growing up saying the Pledge of Allegiance and thinking America is good, 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 it's like questioning God once you're, you know, a little bit older. And it's kind of an interesting dynamic. And I know a lot of people have had to come to these moments and accept that. And I think once you do, you're able to really start to free your mind and look at things for what they are. But Dan, so let's talk about this a little more. You mentioned the U.S. economy falling. And my question for you then, is it possible that the whole world falls at once? Or if what is lost in the U.S. in terms of wealth, is it captured somewhere else? Does the wealth enter some other vehicle? Is it another jurisdiction or maybe in another investment class? What are your thoughts on this?
Good question, Kenneth. I think we're in a day and age with the printing presses having produced $16 trillion in global central bank balance sheet expansion, where we have levitation of asset values. I mean, at the end of the day, it is supply and demand, right? If the central banks of the world have been coming in and then the traders have been riding their backs in terms of pushing up asset prices, you know, the famous Greenspan put, the Bernanke put, the Draghi put in Japan, and so on and so forth. So I think a bigger question is, and you mentioned this, I think at the outset, do we have a total disconnect between present day valuations of assets, bonds, stocks, and real estate? They're all kind of tied at the hip to a discount rate. Even property, most of it is debt encumbered. So while it's a real asset, if it's debt encumbered, it ties back into the bond complex. And we're in a 37-year unprecedented bond bull market, the last 10 years of which has been very massaged and manipulated, the 16 trillion in central bank money printing. So I think, you know, we are in an interconnected world. We've got, recall back in 08, if you would, where the American real estate, the securitization of American real estate mortgages ended up almost sinking UBS in Switzerland, even the so-called AAA slice of it. What I'm trying to say is I think we've got global money printing, we've got global asset valuation animation through this, levitation, if you will. And I think the whole thing is a lot more interconnected than people want to believe. It's hard to find a place to hide. When this thing blows and confidence is lost for whatever black swan reason, I hope Australians don't get on my back for saying it, because they say there's a lot of black swans down there. But I think it's going to be difficult to escape from, which is also why we mentioned the contagion risks being revisited. All right. So I think we have an utter disconnect, thanks to financial repression, between underlying economics, productivity, wealth generation, private property rights, and markets, which actually suggest we're in wealth of nations trajectory modus, where both free market capitalism and private property rights are intact. And if anything, they're less intact by the day.
Yeah. Well, so I guess the question is where are we in this cycle? And I know that's very hard to pinpoint, but I mean, even Warren Buffett, when he was talking about his purchases, he wasn't overly bold in his optimism for, where the values are. I mean, he's like, yeah, I wish, I could have got Facebook cheaper, or I wish I could have got Apple cheaper, or whatever, that he was talking about. And he's saying basically, hey, there's not a whole lot of deals out there. Jamie Dimon, a lot of people are saying, we're in the sixth inning possibly. Where do you think we are? And is it possible that, no cycle is alike? I know that's a truth. No cycle is alike. But is it possible you go another 5 or 10 years? I mean, why not?
Kenneth, I don't know that any more than the next guy, other than to say this. Let me make a perhaps a poor comparison. Let's say you don't, and I thankfully don't, had some outrageous blood pressure readings. Let me use the fictitious 220 over 110, okay? In other words, cardiac arrest city, right? You went to your doctor 9-10 years in a row, and you kept having those numbers, and every year the doctor said, hey, Mac, you're going to drop dead any day. You're going to have a brain aneurysm. You're going to have a stroke. You're going to have a heart attack. And it never happens until it does. And what that break in confidence is going to be, obviously, neither global productivity nor global savings, nor the debt that's been brought into the world through money printing suggests that we are on a sustainable economic trajectory, much less the financial one, how we finance our economy, because we don't have the productivity we did. And the proof is in the pudding. Because if we were in a productivity engendered economic growth era, then we would be paying down debt, not adding to it. Add into that, obviously, the aging, my generation, the baby boomers. You've got demographic issues as well, and you've got the massive malinvestments. You have both redistributionism, cronyism, and frankly, also balkanization and transfer of property rights from OECD countries to people entering those. So I kind of say it's a toxic public policy stew. Are there good developments? For sure. Look at us being able to have this conversation. Technology is wonderful, but you know what's amazing? Given all the technological innovations, if the past is prologue, we should be facing productivity-based deflation, not inflation. So in fact, the technology is trying to save us from our political and financial and economic policy insanity. But at some point, things end. And I think we are much further than the sixth inning. Frankly, I think we're in the ninth inning, but I grew up Catholic, so here's a confession. I also thought that last year and the year before. Okay, but we are every day closer to that moment where 220 over 110 is going to trigger something ugly. And that's about the only way that I can describe it. And perhaps one other thing, if I may. Let's say you're given a chance, you're given a grace, you're given a time period and within which to adjust to reduce your exposure, whether it's medically, whether it's your blood pressure, whether it's your portfolio. Every day that this valuation insanity continues is, in effect, a gift for those people that bought bonds and stocks at absolutely bubble valuations, right? Not the people by age, by luck, by wisdom have Johnson and Johnson and Nestle, where it's an adjusted PE of 3 or 4 based on their purchase price. And they have dividend yield of 10, 12, 15% because they bought it 20, 30 years ago. Those people should stay put. They're fine. But everybody else isn't. So this huge bubble and the continuation of this dichotomy between economics and finances and the valuation of what we're buying is a wonderful opportunity to bring capital into safety, to then revisit valuations, which are not going to be back to the mean, but we have reversion beyond the mean. In other words, like we have bubbles now, we're going to have massive bargains later. I see it as a huge reallocation opportunity.
I'm 100% with you. And in fact, I've been saying similar things. I think we've been in this historic bull run for too long now, if you ask me. But I'll play the devil's advocate here one more time, and then I promise we'll move on. And just piggybacking off your analogy of, the person with the heart problem, technology comes along and, let's say, allows your brain to be inserted onto a robot, and all of a sudden now, there's this fix where you are now plugged into a robot and you don't have to depend on a heartbeat. Is there any sort of bet on human resilience, the humanity that could potentially be a game changer for the stock market, for the world economies, that could continue to fight this uphill battle of unsustainable economics?
I would say that's always possible. For example, if we were able to commercialize fusion instead of fission, where we'd have nirvana, energy nirvana. But let's peel back the onion a bit and take a look. If we take a look at green cronyism, the Al Gore lies, if we take a look at all the enhanced redistribution, if we take a look at reduced property right protections and freedom, all these things our founding fathers and framers set up that set and force the best growth possible, attached, of course, to solid money, backed by real money, silver and gold. We are today, and I mentioned this before, we've got these technological advancements despite all this flack we're getting in terms of policy. So I would say to you that the valuations we currently have today, in fact, price in a Jesus moment, okay? They almost say the Savior is coming again and is going to somehow pull us out of the swamp, even though it looks like we're getting more deeply into it. So my response, and if it's a bad one, I apologize, is to tell you that we are already pricing assets for the moon. We're already priced to have this rescue, whatever its nature may be, and technology is typically the best one. But think about this. Historically, growth stocks have been what? Technology stocks, where what they sell gets cheaper and cheaper, which drives the volume because more and more people can afford it. Yet we are in economic policy, financial policy, central bank policy, which is actively seeking the destruction of the purchasing value of paper currency, right? So it doesn't really, to me, it's like, all right, we're waiting, and a lot of this is financial repression based. A lot of it is the central bank puts in Japan and Europe. It's been suspended here with QE turning into QT. But I think things are almost priced for an absolutely blue sky scenario of a sudden reversal to productivity growth, to better jobs, to higher GDP growth with less debt growth attached to it. Yet I don't know, given our current policy mix, how we hope to get there. And if technology takes us there by hook or crook or terrific surprise, then I would argue that we have it fully priced in the way things are.
Well, that was, I think, very hard to argue with you on that. And I like what you said. We're already pricing assets to the moon, and that really, for anyone questioning that, I mean, you really just, I mean, we're getting the reading from the doctor, 220 over 110.
Right.
So it's time to plan accordingly. I want to jump into this article real quick, and then I want to ask you about Bitcoin, your thoughts on that. But this one about the good, the bad, the ugly regarding Trump, I thought it was a great piece, and it was really put in a way that was, from the perspective of what is good for an American and what they should want from their president. Everyone has different opinions, but I really felt like you wrote it from what is best from the American person,
Right.
and that's very fair. So if you would just kind of share some of the thoughts that you had regarding Trump and, the good, the bad, the ugly.
First of all, I am god awful glad that he's in the White House and not Hillary. Right. Let me say that up front. If we had her, it would have been the end of any effort to resurrect even a shell of a constitutional federalist republic, because she is so aligned with the despots that want to have global government and all that other terrible stuff. That is the total and utter disenfranchisement of the U.S. citizen, which the Constitution and the Bill of Rights is supposed to prevent. So in that sense, I'd say that Trump, that's the good, all right? The bad is the credibility associated with the man. You remember during the campaign, and I don't want to do muckraking here, but if you're trying to move the needle forward and get back to the rule of law, which means fidelity to the Constitution, that's what the rule of law really means. Not statutory, congressional laws, but the highest law of the land is the Constitution and the Bill of Rights. So I wonder in the bad whether Trump truly has the integrity. I wonder about how many contractors he stiffed by just saying, "So sue me," and how that lines up with the interests of everyday working Americans. I wonder about his Ted Cruz's dad killed JFK stuff. So if these kind of things are kind of tabloid, kind of junky, you know what I'm saying? Nobody's perfect. I look in the mirror and I see 1,000 reasons why not every day. And I'm not trying to pigeonhole Trump here, but I do wonder about the character. And character is very important if you're set on a mission to bring back something which 100 years of regressivism has almost taken out. Last but not least, what really worries me in economics is not only his giveaway on the spending, all right, that's actually part of the bad in the article. He promised to shrink government. Well, he promised to get regulations off our back, and they've peeled some away. But Kenneth, how can you shrink the bureaucracy, the deep state, all these unelected miscreants that make 90% of the laws that we have to subscribe to? We don't even know what we're doing wrong, and all of a sudden we're handcuffed and thrown in jail. That is the modern day state, and they got them all on the books for a reason. So if anyone falls out of line, they can come up with 5,000 regulations to, throw you in a slammer. I'm not exaggerating by too much, unfortunately. But what Donald Trump, as the executive of all the agencies that he oversees, with all these entrenched bureaucrats and all this scum at the CIA and FBI and EPA and elsewhere, we know Lewis Lerner, IRS, I mean, the best way to do away with regulatory overkill and unconstitutional legislation, i.e. by the bureaucrats, the executive branch, which he presides over, is to really go after the bureaucracy, hook, line, and sinker. Because without taking out that cancer, you cannot get back to constitutional government. You cannot get back to a representative government, where the representatives of the House do the will of the people as checked by inalienable rights, which cannot be voted on by anybody, right? So that part is kind of a mixed bag. His bent to fight off all these miscreants that insist on taking power unconstitutionally gives me big hope. And his trade stance, unless changed, I think he's a Neanderthal on trade. I think he's a mercantilist. Yes, America's gotten screwed in trade deals, but America has basically shot itself in the foot through its own policies, whether it's outrageous corporate compensation packages, whether it's the end of parallel interests between top brass, the C-suite, and the broader constituency that it's supposed to serve, whether it's the litigation, which he actually thrives on or thrived on, so sue me. So you cannot, and history shows, engage in trade wars. And today, you know, people bandy about the fact that, well, China's the most exposed. You know what I say to that? BS. Have you ever gone shopping in the non-grocery section of your Walmart and seen a lot of made in the USA labels, either here or in Canada? No. If you look at a Dreamliner, the jet engines are outsourced. No, they're the only ones made here. The airframe is outsourced. If you take a look at trucks made in the USA, there is, what I'm trying to say, a global supply chain. So for American companies to be able to bring back jobs and undergo the tough love we need to do domestically, and to have citizens and shareholders involved with bringing back a sustainable business model instead of one that buys back stock and is corporate anorexia, is where it's really at. And in so doing, we shouldn't shut ourselves off from the parts that we now can no longer make in order to reinstitute domestic manufacturing vibrancy. We need to access the global supply base because we don't have it anymore. So the risk here is actually, in my view, tremendously bigger for America. Last month in July, we just got the trade statistics. America's trade deficit increased by nearly 10%. Now, 1 month the trend does not make, but usually the country that is most vulnerable in terms of being able to sell things because it needs the supplies and the parts from overseas to do it is the one that has the most to lose. Our founders knew this when they put the country together, and they knew that they were obliged to the good graces of Britain for manufacturing, for weaponry. They wanted to end that. Well, you don't end that by starting a global trade war when you are short on your own ability to supply what's needed to produce what's required.
Yeah, and from a fundamental perspective, I completely agree with you on that. The only thing that I would say, the only caveat, and maybe you would agree with this to a certain degree, is I think Trump is playing three-dimensional chess with a lot of these countries, and there's posturing going on, and I think it's still early to say that this is what he wants to implement long term or for an indefinite period of time. But we'll see how that plays out, because from a traditional theoretical perspective, I 100% agree with you on this, but I'm open to seeing it play out in the way it does. So,
can I add one comment, Kenneth?
Sure, go ahead.
Sorry. Take a look at what's happening to soybean exports now. Take a look at and this is really this domestic issue with the toxic public policies too. A free market is the best allocation mechanism. Price discovery, free markets. If you go and you make these moves, and China then does tit for tat, or the Europeans with Harley Davidson, you end up throwing a monkey wrench in an incredibly complex system. You've probably seen that wonderful video on how complicated it is just to make a pencil, right? And how many component parts
Milton
are
Friedman,
involved.
yeah.
And when you mess with something like that, just like when you mess with nature and you put in a non-native species, or you take out, there is a ricochet effect. And Trump believes, I think, that he can outsmart the market. And I don't think anybody can do that. And that is the fallacy of this whole thing. And if he does this to badger the Chinese into concessions, I get the intellectual property rights, yes. But you know what? After World War II, we got Wernher von Braun. We got a lot of, if you go to Intel in the museum on chip generations, half the names you can't pronounce. They came here and they did it because they had a better chance to excel here. So let's be very careful about stealing, patents and intellectual property. It's a global thing and everybody's involved in it and always has been. My fear is that this can get out of control, and the results of that in a day and age when we have weaker economic growth, more debt, countries desperate to earn, including now the emerging world, this can really set off a domino effect in a negative fashion. It's a hot potato.
It really is, yeah, and that's the escalation of the trade war, and I think a lot of people are worried about that. And maybe you could shed some light on this since we're talking about the consequences of a trade war. The U.S. is probably one of the biggest buyers of most products and commodities that are out there. It's at the top of the list for the majority, and I understand the consequences for people here and the prices going up. But it's also consequential for other countries who depend on the U.S. purchasing their products, especially for a country like China, which sells a great deal of its products to the U.S. If all of a sudden now it gets more expensive, what is their breaking point, and is there a breaking point for them that is positive for the U.S.?
Good question, and that's obviously always the argument that people make, that America is in a catbird seat because it buys all this stuff. Well, 2 points. Number one, how does America buy it? It prints the money. And Chinese already got something like 2 trillion of U.S. paper. They're trying to use those dollars while they still have today's value to purchase real assets, especially in Africa. Energy assets, agriculture assets, very important for feeding its people and for providing the energy with which to go forward. So sure, Chinese, and they're communists, they're 5-year plans. They don't want to all of a sudden risk a revolution or a broad segment of the population thrown out of work. So they too have skin in the game. But we've all heard about the Silk Road Initiative. We've heard about Russia and China doing non-dollar-based trade deals where Russia has more raw materials and commodities than any other country in the world by far. So what the Chinese are doing, and the Germans are now also joining the natural partners with Russia. Germans send them capital goods and the Russians send them commodities, is we have a pivot away from the United States. And you mentioned before that America buys the rest of the world's stuff. Yeah, but the rest of the world over the last 10 to 20 years has established something along the lines of a middle class, maybe not our definition, but theirs, that is starting to purchase a significant amount of stuff. And if they can rejigger the availability of that domestically, also through the strength of a stronger currency, which allows them to buy oil and coal more cheaply, why then that probably is the best way for them to proceed. There are going to be hiccups, but the big question mark is why do you want to continue to sell stuff to the biggest economy when the only way it can really pay for it is to print the money and to continue to go ever deeper into debt? I think there is also an end game here, and it's been long in coming, and we see moves to try to take out the dollar's monopoly status in the oil markets. We see all these non-dollar trade deals. These are all just little things, but if enough little things progress at the margin, and that's where change is, at the margin, right? Then this can build a head of steam. And perhaps the U.S., with its badgering, with its clubbiness, whether it's use and abuse of the dollar as a weapon, you do this or we'll do that, and people getting frozen out of the SWIFT system, is encouraging people to migrate away from the dollar. And we certainly have abused our reserve currency. Before I think you were born and before I knew it, Lyndon Johnson's Treasury Secretary at the time, John Connolly, after the United States gave up the dollar, the gold-backed dollar in '71 in August, the European finance minister had asked Connolly, well, your currency, it's going down, it's a problem. What are you going to do about it? He said, famously or infamously, the dollar is our currency and your problem, okay? So America has been abusing its leading reserve currency role by virtue of printing the money to pay for things it can't purchase, by virtue of running up debt that the world has never seen, and not backing away. It's like an alcoholic. You can't fix alcoholism by drinking more. And I would suggest that the rest of the world, think of this, it's the iPhone you use or I use, the laptop that we have. So many things are no longer made here. We got the brand maybe, but sooner or later you have a migration of the very guts of the value added too. So I would ask it the other way. Why should the rest of the world keep sending stuff to America as it has been doing when it holds the bag in terms of having to eat longer term the currency devaluation risk?
Dan, I wish we had more time. I definitely want to ask you one more question, but we could definitely do another interview here in the future.
I'm game. The good, the bad, and the ugly.
The good, the bad, and the ugly. I'm thoroughly, just so I want you to know, I'm thoroughly enjoying this conversation. You're a very smart person, and you have a lot of insight and really how the fundamentals work. And I think that's why you're such a valuable resource. And so I commend you for that. I want to ask you about cryptocurrencies, especially from your history as a banker and your thoughts on economics. You mentioned something about needs in society, and that's how things come about. And I believe that cryptocurrency was one of the answers or one of the consequences of a poor financial system. And, we had Bitcoin birthed out of the 2008 financial crisis. So I'd like your general thoughts on Bitcoin. And, do you think it's going to be a long-term thing? Is it something that might be around for maybe 100 years and then fizzle away, or just kind of fizzle out in the next couple of years here?
Okay, that's a loaded question. Let me say this. I agree with you that when the discipline imposed by limited, difficult to extract from the earth, gold and silver. I mean, back in '65, we still used to have a 10 and a 5 and a $20 note, treasury note that says payable to bearer on demand in silver, right? So we've lost that. '71 bid farewell. So we've been in an age where central bankers, which operate together with governments and politicians that want to get reelected by promising ever more candy that can't be paid for, this obviously is no way to preserve people's earnings, their labor, and how they spent their time. I fully agree. In other words, they suck. And paper currencies over history have lasted all of about 25 years, with big variants, obviously, like the British pound. So it's natural to look for something different. I think the best solution, personally, is in the Constitution. And the founders and the framers knew what happened when you can print money. And in fact, they had to do it twice. There were two national banks in the United States. Jackson killed the second one for a while. And Trump has Jackson's picture in the Oval Office, as I'm sure you know. So hope springs eternal. I don't know if that's more than just a photo op. I don't know that. But my question would be the following. If Bitcoin and the cryptos in general are the new way to conduct commerce with stable currencies, and they are a result of bleeding trust and confidence in fiat currencies, beyond the slow erosion of purchasing power, since the Fed was created, where the dollar has what, 2 or 3% of its purchasing power left, maybe less if you look at real inflation numbers. But my question is this: if the cryptos are not just a bubble and a way to get rich quick, this increase in the market capitalization, notwithstanding the stark correction we've been going through, would have, one would think, caused plummeting bond prices, because bonds, government bonds, sovereign bonds, are what? They are currency bets at the end of the day: maintenance of purchasing power, solvency, the risk against inflation running out of control. Neither the bonds, notwithstanding the massive financial repression, but if we argue that faith in fiat currencies is being lost, and we should see not just a rise in crypto valuations, I would think, but we should see a plummeting in bonds and government bonds, that is much higher yields, all right? Not ZERP or NERP or negative interest rates, but we should have the bond vigilantes running for the hills. We should see oil priced in dollars. That's at $100, $150, $200 a barrel. So I guess my question is, if faith is lost in fiat currencies, which, based upon what I just said, has not happened yet, is in the process of happening. It's been happening since '71, and historically way before that, time and time again. That's why they only last 25 years. That's why the intrinsic value of all paper money that isn't tethered to gold and silver is zero. And it gets there, right? Just a question of how long. But I wonder about the role that a relatively complex arrangement called cryptocurrencies, with these multiple wallets, with this difficulty in terms of the frictional costs of trading these things, the massive energy use, notwithstanding shifting to technology which is 100 times more efficient, including different microprocessors. Today's use of energy to drive just Bitcoin is approaching, I believe, half of what Denmark consumes in aggregate, where you can power something like 500,000 households. We are rapidly entering an age where our fossil fuel endowment is getting more difficult and expensive to tap. So I wonder, from all those perspectives, whether cryptos really are a viable alternative currency solution. And then when people talk about Bitcoin being limited to, 21 million, well, yeah, then they have forks, or they have splits, so they have spin-offs, so there's new cryptocurrencies. I wonder, frankly, both the cryptocurrencies themselves. Let's say you buy one. What do you do when you make an investment? Where is the return prospects? Where's the profit and loss? Where's the scaling? Where's the ownership? If I buy a share, I have a share in losses or profits. How does this work with cryptos? Moreover,
if you're asking me, I think it's similar to what the expectation would be in gold or a dollar. There is no return on that. It's a substitute for money.
Very good answer. But let me ask you something. Since when does money shift around by 500% in 2 months? That's not money. That's not money at all. Since when does money?
The Turkish lira and there are examples of this, and this has been a solution for a lot of these countries who've dealt with problems with the traditional fiat currency system, right?
Well, yes, we have Venezuela. We had Italy of old. They used to race 3 digits and then 6 digits and 9 digits, but they found that they came back home to roost. Money is supposed to be what? It's supposed to be a ledger. It's supposed to preserve purchasing power. It's supposed to take your labor and you manage to sell something for a profit and freeze it, right? You're right. It's not supposed to have a yield. You're absolutely right. But by the same token, money that's held its value over time has had a recognizable value by itself without being money. because money can get destroyed. If you take a look at what is the value of Bitcoins on an internet where we might have all kinds of cyber issues, where we might have energy depletion issues, where we might have big governments trying to crack down on them and God knows what, or we take the tax aspect of it. But I'm getting into the weeds. Let me just ask you this, and I obviously don't know. From my way of thinking, money should be divisible. Okay, Bitcoin is. It should have an intrinsic value by itself. Bitcoin, in my opinion, doesn't. It should be widely used and recognizable. It should be fungible, right? And it should be transparent, and at the same time, it should be relatively discreet, right? I wonder how discreet, given the ability of people to tap into all kinds of software, I wonder how discreet this really is at the end of the day. And that might go off the deep end into conspiracy theory. I don't want to major on that, but frankly, I think a much better solution would be to marry money again with physical precious metals. And then people have the argument, oh, there's not enough. Oh, baloney, there's plenty. They grow about 1 or 2% a year. That's what real GDP growth is, which is population growth, right, and productivity. So if you can have a system where you can make it easy to go back to the receipts that we used to have, the fractional reserve banking, where it wasn't fractional but an actual a receipt for the underlying metal, then I think you're off to the races. But I personally think that Bitcoins are a .com mania. You will most likely disagree with me, probably strongly, but you asked, so I dared say.
No, your opinion is welcomed here. And it's definitely something that I'm open to the concept of. You know, what I can tell you is that we did see it here at Crush the Street, and we knew there was going to be a massive demand for Bitcoin, which is why we got into it, and you know, we were able to, you know, be a part of one of the most historic bull markets ever in history.
Congratulations.
So very, 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 you know, happy about that. But at the same time, some of those concerns that you have are reasons why I believe that there could be a shift out of, you know, some of these cryptocurrencies, maybe even Bitcoin, at some point down the line to some other alternative. So it's completely possible. But having said that, we're almost to the top of the hour. We got to close out this interview. I really appreciate your time with us here today, Dan. If people want to learn more about what you do and the website and what you guys offer, please let them know where they can go and what they'll find.
Thank you very much for the opportunity, Kenneth. It's been a lot of fun. And they can go to www.dkanalytics.com. I got real creative, Dan K for Kurz, dkanalytics.com. And it's all right there. It's free. And thank you very much for the opportunity to chat with you today.
Thank you for coming on Crush the Street, Dan. We'll definitely have to do a follow-up here in the near future.
I would be thrilled. Thanks a lot, Kenneth.